Did you know there's a reason why certain neighborhoods have fewer banks, higher loan denials, and homes that are appraised for way less than they should? It's not random. It's a ghost of a practice called redlining. And even though they made it illegal decades ago, banks found sneaky ways, new ways to keep it alive. Today, we're pulling back the curtain on how banks still block wealth in foundational Black American communities. And trust me, it's deeper than you think. In America, there's a game where everyone is supposed to get a fair chance to buy a house, go to a good school, or start a business. But a long time ago, some people, white supremacists, made secret rules to cheat. They said, if you live in the neighborhood with lots of foundational Black American families, we won't give you loans or nice things. They even drew red lines on maps to mark these neighborhoods. That's why it's called redlining. The neighborhood you live in could decide whether you get approved for a loan, even if your credit is solid and your income checks out. It's the ghost of redlining, a practice so toxic it was made illegal over 50 years ago. But here's the twist. Just because it's illegal doesn't mean it's stopped. Banks just got smarter about how they do it. To really understand the wealth gap today, you gotta understand how the game was rigged from the start and how those same rules are still in play. So let's get into it. First, let's break down what redlining actually was. Back in the 1930s and 40s, the federal government partnered with banks to grade neighborhoods. They made these color-coded maps to show where it was safe to invest and where it wasn't. If a neighborhood had mostly Black residents, even if they were working class homeowners, it automatically got a big red circle slapped right on it. That meant banks refused to give out home loans, business loans, even basic insurance policies in those areas. And without access to fair financing, it was almost impossible for foundational Black American families to buy homes, build businesses, or even pass down wealth. Redlining didn't just stick to mortgages. When banks pulled out foundational Black American neighborhoods, what they left behind was banking deserts, places with no access to fair credit or even basic checking accounts. Imagine if ice cream trucks, parks, and grocery stores refuse to go to certain neighborhoods. That's what's happening today. Banks and businesses often ignore foundational Black American neighborhoods so they don't get banks to save money, grocery stores with fresh food, schools with new books. This makes it harder for kids and families to thrive. In 1968, after a whole lot of activism and sacrifice, the Fair Housing Act made redlining illegal. But here's the thing. Making something illegal doesn't make the mindset disappear. Banks didn't just suddenly become colorblind. They just got better at hiding the discrimination behind neutral policies. For example, things like credit scoring systems that reward you for having family wealth, something foundational Black American families were locked out of. Most foundational Black American families' generational wealth was stolen. Higher interest rates for Black borrowers, even when their credit and income are the same as white applicants. Loan denials in Black zip codes, even if the neighborhood's income levels are solid. It's like they changed the playbook but kept the same goal. Keep foundational Black Americans locked out of wealth. For example, if your grandma couldn't buy a house because of old redlining, you might not get help paying for college. See how that's passed down? If you grew up in a neighborhood with bad schools because of redlining, it's harder to get a good job. It's like being graded on a test your grandpa failed, even though you studied hard. If you think this is just ancient history, think again. In 2022, City National Bank was fined $31 million for avoiding foundational Black American neighborhoods in Los Angeles. They straight up refused to market loans or open branches in foundational Black American neighborhoods. In 2018, Hudson City Savings Bank got caught redlining foundational Black American neighborhoods in New Jersey, New York. They steered loans away from foundational Black American areas and funneled them to white suburbs. They had to cough up $27 million for that. And it's not just a few bad apples. Studies show that even today, Black mortgage applicants are twice as likely to be denied as white applicants, even when they have the same financial profile. The system isn't broken. It's working exactly how it was designed to. So what moves in FBA communities when banks move out? Payday loan shops charging 300% interest, check cashing spots charging you a fee just to access your own money, prepaid debit cards with crazy fees just for an account. Even the shiny new world of fintech apps and AI loan approvals, that ain't safe neither. Those apps, they train those apps on historical data, which means they've already learned who's risky based on decades of discrimination. The apps doesn't need to know your race. It can see your zip code, your income, and your neighborhood's history. And that's enough to be biased and for the bias just to creep back in. See, this has nothing to do with FBA people being lazy or not trying. It's because the rules of this game were secretly broken for hundreds of years. Our ancestors had to deal with it. We're dealing with it to this present day. And no one fixed the board yet. Even though we've made progress, the old unfairness still sticks around like a invisible glue. So why does this all matter? It matters for a good reason. It matters because home ownership is still the #1 way families build generational wealth in America. And if foundational Black American families are constantly blocked from buying homes, are forced into unfair loans where they prey on foundational Black American families, that wealth gap gets wider with every generation. Today, the median white household has nearly 8 times the wealth of the median foundational Black American household. That's not an accident. That's the ripple effect of redlining, still hitting us right now. Redlining didn't die, it just went digital. The fight to build wealth in foundational Black American communities starts with knowing the truth about how the game is rigged and who still is rigging it. If you learn something today, hit that like button, share this with somebody who needs to hear it, and subscribe for more hidden history that shapes the world we live in today. And let's get this video up to 200 likes at the least, you dig? Because wealth building should never depend on where you live or what you look like. See, redlining isn't gone, it's just wearing a disguise. But when we talk about it, learn about it, we could fight to do something about it. We could rip the mask and make the game truly equal, or as equal as possible. P.S. We never too little to care about big fairness. That's foundational Black American culture. Peace, foundational Black American family. I'ma catch y'all in the next one.